Hey, what's going on, everybody? This is Peter here with Real Estate Trends and Market Updates. Happy New Year. It's 2023, and we did the last episode that I did was talking about kind of planning for business and getting prepped for this year. Now we jump into 2023. This is the first week of it. Um, and I kind of wanted to go over, expectations for what we're seeing for the market, what we're going to go forward to, and ultimately what we're looking at here in the future. So, we had a pretty up and down year because of rates changing. Obviously, that was the headline each and every time, and then also the housing market crashing completely. So, um, we went through about 2-3 years of really really solid upward tick in prices, significant upward tick in prices, and now it's kind of leveled off. So we're sitting at a different, um, at least perspective as you look at it for what it was now, um, what it was when we started the year in 2022, and now 2023. So overall, in Orange County, when we started 2022, was the lowest inventory we've had since about the early 2000s. So 945 active listings in Orange County, which is, our normal is about 62 to 6,900 active listings. So you could see how far that's off. But now, as we come into the early January of 2023, we started off a little bit stronger. So as it sits now, we were about, let's see, for us, just to give you some context, we're sitting at about 41% higher. So that's pretty significant, as it sits, 41% higher than that, which is, when you look around, you're like, okay, well, 954, so 1,000. Um, what's the difference? What does it look like now? So um, now it's gone up, which has given buyers more opportunity to negotiate. I've had a lot of buyers negotiate a lot of things, but um, you know, what do we see on the interest rate front going forward? Ultimately, I see rates they've gone up just a little bit, so they haven't been as nice and or as good for us the past week, but it's trended down from when it was going up significantly each and every month. You would hear bad news, bad news, bad news over and over again, but now it's kind of leveled off, which is nice. So, demand is down a bit because of the housing market, the interest rates, and as we went into the holiday season, it seemed like demand was down quite a bit. So um, it's gotten a little better now as we jump into 2023, and when we look at a overall perspective going into Orange County demand year over year, we're sitting about 1,500 ish properties demand wise pending sales, and then going back to oh um, 2021, we were at about pending sales of almost 2,000. And then that was the same thing as 2019. And then 2020, pending sales was up to about 3,000 almost. So you can see how demand over the last 4 years has really stifled on pending sales because not we didn't get flooded with inventory. That didn't set us up, so we didn't get this huge flood of inventory. That wasn't that big of a deal, but ultimately we did get some inventory, and then also the interest rates, and I think coupled with the holidays, it really tilted people back a little bit, and didn't want them to continue to move forward on you know making some type of move on a property. So there's that. That's something to be cognizant about. And then um, going into a forecast for 2023, I think And I'm reading this too of this dialogue on what this person thinks versus that person on inventory. I think honestly, it may go up just a little bit, but it's not going to be an overall, crazy increase on foreclosures and everything else. So I think we're going to see a little bit lower of demand for sure in the last 2 years, low demand. Inventory is going to go up a little bit, and then you're going to still be able to get that cash back at close and or the ability to negotiate those prices. You're not going to be able to get $100,000 off a $370,000 property, which I was just asked about from a buyer, but you're going to be able to, get some offers accepted with. We actually got an offer accepted on a new build for $25,000 off and an extra $25,000 incentives. It's paid off solar and all appliances. I know sometimes builders will do appliances, but they were adding washer and dryer and a brand new large fridge. So that puts an extra $25,000 on the table for the client, including the $25,000 discount. But right at the last second, the client didn't want to go forward and they sold it at market value. Well, at least at asking what they had it listed for. So we almost got that. And you hear these trends more and more again, more and more as we go along in this current flux of the real estate market. And I think it's prudent to say that as we continue to build on the inventory that we were lacking, and then also the interest rate change, demand's for sure going to be down. And if you just got into the business 2 years ago, demand is for sure going to be the challenge, and you're going to still continue to see the changes each and every time that changes do come up with, for instance, jobs on a scenario where it's not it's ultimately not what people expected, but you're still going to have that negotiation factor, which is awesome. You're still going to be able to negotiate it. You're still going to be able to have that ability to conversate. And then it's working with agents that ultimately can do that. But um you know I would really, if I were you, I would look into um getting into the market on a property that's a potential rental. I know that's crazy to sound, sound the alarm on, buying investment properties and rentals, but let's talk a little bit about that. So even if you haven't bought one yet, you really think about buying one here. In This should be a goal. This should be a vision for you in 2023, is to buy at least one. Doesn't matter if it's in your area or out of area, and it's a scenario where um, maybe it's the numbers aren't exactly there. Maybe you're cash flowing $300, but you want to be cash flowing 3,000 because these Airbnbs. Well, the Airbnb market has changed. It's definitely changed. So you see that too. You see that all over the place where I have clients particularly that haven't had really any guests on their Airbnb that they put up into place last summer. So those are scenarios that happen on a daily basis for Airbnb now, because the market has changed, and then also the cities continue to crack down and tighten up. So I would look, the scenario goes, continue to look at those long-term rentals, and then adding value to the property. So adding a second unit, those types of things. I know California is kind of been one of those leading members of doing a back unit. So an ADU. So yeah, that's kind of the scenario that I would look at is, can you add value to that property? Can you add ultimately, can you add a house? Can you add, a second unit? Can you build out that unit to make it, a 4-bedroom, 2-bath house and then rent it out for a lot more? Those are, what really resonates with ultimately um, a lot of the investors that are still doing deals today, because you've never heard of an investor say, "I don't want to, invest because the interest rate are higher." They just go out and make deals happen, and they find deals. Doesn't matter if it's off market or on market. They're finding deals, and they're finding them in a good scenario for you, or them. Pardon me. That's actually, where it's making sense. I just ran numbers on a property yesterday, and I'll pull it up for you. Um, it was a property that was, oh, let's see. So this property was 600, so it was basically $700,000, 10% down. Roughly payment would be $4,300. Down payment 67.5, so 67,500. The long-term rental rents for 2,400 for front, 1,800 for the back unit at a 1 bed, 1 bath in the back, 2 bed, 1 bath in the front. So you're looking at 4,200 income. I know that's a loss, but if you're living in one of them and then you're renting out the back or you're renting out the front, your scenario goes where you're saving a lot of money. So, and then midterm rentals, midterm rentals, you go on Furnish Finders and you can, get nurses, traveling professionals to rent out the property for 3, 4, 5, 6 months. And they get a stipend to go in there, be a nurse for a little while and then go bounce somewhere else. So, and this one, midterm rentals, because I know it, I walked through a property just right up the street before I walked through this property and I saw this one on Furnish Finders. They were renting out the back unit for $2,850, and it's a 1 bed, 1 bath, fully furnished, all that. And then on the front, it's 2 bed, 1 bath, nicer, a little bit bigger. That back unit was 670 square feet, I think, roughly. When I walked through it, this was a couple years ago when I walked through it, but I just randomly saw it on Furnish Finders because I got a property right down the street from it, actually a block away. And it's going to be basically the same because we're building the second unit. And then the front unit they had it listed for 3,000 a month. So they're getting 58, basically almost $6,000 a month on that property. So something you should think about and consider is midterm rentals. So if you looked at those numbers, so you look at 4,300 and then 5,600 of income, and then you're looking at a scenario of 56. Your payment is, let's see, 56. Payment is 43. So you're about 1,300. This is, let's say you lived there for a year and then you moved out, you didn't refi it. You're sitting at $1,300 a month, and let's say that goes up by 200 because you had it there so now you're cash flowing $1,500 a month once you move out, and then you go buy another property. And then you're saving money, obviously, being in there. And then let's say you're paying for, expenses and stuff like that. So because you're doing a midterm rental, so let's say minus 500, your cash flow $900, $900,000 a month, after taxes, insurance, everything else that comes into play. That's a good deal. That's a solid deal. So stuff like that, as you look across the plane of doing deals, you really got to be prudent in that and making sure that those deals pencil out, for one, and then two, where those deals happen. So hopefully that makes sense. Hopefully that helps. And if you guys have any questions moving forward on deals, let me know. And then also, if you guys don't have any questions, but you're trying to get the 2023 started, email me at peter@realtormck.com. Let me know your goals, what you're looking for 2023. See if I can share you mine, and we can inspire each other. Thanks for listening. We'll catch you next week on another Real Estate Trends and Market Updates.